We'll jump right in and talk about what we feel is a really exciting story here at the Bunker Hill Mine in northern Idaho. So I want to start off by just talking a little bit about who we are as a company, where we're at, and what you can expect to see from us. You know, we're here in northern Idaho at the Bunker Hill Mine, and we are looking to build a modern U.S.-focused silver company focused in the Silver Valley. And what's really important to understand is that we're not an exploration company. We are a brownfield development company, and we're looking to restart the Bunker Hill and make it the cornerstone asset of a multi-asset mining company that, again, is U.S. focused and precious focused, centering our efforts here in the Silver Valley in northern Idaho. So we have a great leadership team. I'll introduce you to the team here in a minute. We have a world-class asset. We have the right approach and vision. You know, the world is changing, and we are very much a part of that and want to be on the leading edge of the change that's happening in the mining industry. And we have the right strategy. As you'll see in the presentation as we go through, you know, we have a line of sight to a rapid restart and cash flow generative operation. And at the same time, we have enormous potential or upside potential through exploration of the asset. Briefly, just introducing our team. Richard Williams, our executive chairman, was a former chief operating officer at Barrick. And he was brought in to initiate an operational turnaround and was able to double the operating margin over a 3-year period. As a part of that team, I was the general manager at the Lumwana mine and led a turnaround at that site. I'll let Dave introduce himself in a minute. And we also have Brad Barnett, our vice president of sustainability, who comes to us from Barrick as well as the global head of closure. And Brad brings a wealth of experience dealing with complex environmental and community issues. So Dave, just why don't you introduce yourself briefly?
Thanks. I'm David Ween, CFO, joined Bunker Hill CFO about 5 months ago. Before that, was at Precious Metals North American focused producers, most of which was spent at SSR Mining. I was fortunate to be part of a team that grew that company from a single asset at the beginning with 2 years of mine life left to, by the end, a multi-asset, long life, free cash flowing, mid-tier gold company that, as everybody knows, merged with Alacer in a $5 billion merger last year, and rotated through a number of functions there, and fortunate to be part of the team that met cost and production guidance 7 years in a row there. Before that, I was an investment banker, most of which was spent in London, most of which was spent at Deutsche Bank, covering metals and mining, and hoping to replicate a lot of the success that I've had in the last couple of companies I've been at here at Bunker Hill. So very excited.
Thank you, Dave. So just to bring everybody up to speed on the Bunker Hill asset and the history and where we are today, the mine was mining started at Bunker Hill in the late 1800s. Mined continuously for over 100 years, primarily lead and zinc. There was a lead smelter and a zinc smelter. Not a lot of environmental controls through that period. Fast forward to 1981, the mine was closed because of environmental performance. The EPA stepped in and done a fantastic job rehabilitating not only the Bunker Hill mine, but the whole Silver Valley in northern Idaho. 2017, there was a consent decree that was reached that clarifies and articulates the liability for all past environmental degradation. And that's where our team steps in. In the last year when we joined the company, you know, we came into what was essentially a dormant company. There was no activity going on, and we had a lot of work to do. You know, the first thing that we did was come in and we really focused in 3 areas. One was advance the project technically. 2, advance on the environmental performance side, specifically around water management. And 3rd, focus on the governance and breathe life back into what was essentially a dormant organization. We've done that in the last year. We've created a 3D geologic model. We published 2 43-101 resources. We published a PEA that articulates a path towards a rapid restart. We've worked closely with the EPA, and have improved the water management and the water quality coming out of the mine. And we've done a lot of work on the governance side, revamped and reworked our board of directors, put systems of policies, procedures in place, strengthened our relationship with the capital markets. So it's been a busy year, and we're still and we're looking forward to actually accelerating our pace from here. Just to give a sense of where we are in the Silver Valley, we're on the western extent of the Silver Valley. You see that Hecla runs the Lucky Friday operation. On the far eastern extent, Americas Gold and Silver runs the Core Galena complex in the middle. There's a couple of assets on care and maintenance, the Sunshine and the Crescent mine. What's interesting, when you look at the Silver Valley and long section, Bunker Hill, although it was the largest mine by tonnage, is really the shallowest of the major mines in the Silver Valley, and there's a lot of exploration upside. You can see Bunker Hill here. The deepest level is around 4,000 feet below surface. Lucky Friday is down around 9,000 feet, and the Core Galena complex is down around 6,000 feet. What that means is that our down dip exploration potential has the potential to theoretically double the size of the historic production. And that's a significant production. Bunker Hill, over its 100-year operating life, produced 165 million ounces. That makes it the #3 silver producer in the Silver Valley, which is the largest silver producing district in the world, with over 1.2 billion ounces produced to date. What's interesting as well is that at depth, we're beginning to see the indications in the historic mining records and production records that silver grade was increasing, but more importantly, that the lead silver ratios were converging. You know, that could mean, and what we're interested in investigating, is whether or not there's a silver zonation change, where silver will become the dominant mineral of deposition at depth. And that certainly is an area that at the right time we're looking at focusing on. We believe that the ultimate value at Bunker Hill, beyond what is articulated in our PEA and rapid restart plans, is going to be silver, as we rebalance the revenue stream from a zinc dominant to a silver dominant revenue stream over time, with exploration, and of particular interest in exploration is the exploration at depth. I want to take a moment just to talk about our philosophy and our approach to ESG. Really, what we feel is that ESG is really the catalyst and the foundation on which strong companies and strong organizations are based. You know, we really think that, and I truly believe that the mining industry is changing. You know, the days of a multi-billion-dollar capital investment in risky jurisdictions around the world that at the end of the day deliver suboptimal outcomes on environmental and social performance is, I think that's changing, and we're excited to be a part of that change, and we're excited to be building a company that is going to be the model, we believe, of what a mining company should and will become. You know, one that is looking to deliver a value across not only economic parameters, but environmental and social parameters. That's the exciting thing about Bunker Hill. As we bring this mine into operation, you know, we have the opportunity to actually be a net environmental positive to the local environment as we come in and we continue to remediate some of the environmental legacy challenges that exist at the site, just through going back into operation. You know, we're going to have a very low footprint, where our processing plant is going to be located in the underground environment. There's going to be no surface tailings deposition, and we're going to be very, very focused on addressing the largest environmental challenge, which is acid mine drainage, in a passive nature. You know, we certainly expect that over time that that we will be able to fully treat and eliminate the acid mine challenge that continues here at the Bunker Hill mine. So on to the PEA. This was exactly what we were expecting when we came to the site, when the current executive and management team, when we were looking at opportunities. What we saw in Bunker Hill was the opportunity to have a long life, high margin operation with a modest initial capex and a lot of upside. And I think that's what you see here in the top line numbers with, and I won't go through all of them, but what I will do is turn it over to Dave at this point, and he can take you through some of the detail in the PEA. Dave?
Sounds good. Thanks, Sam. And I think one important point, maybe if I turn it right back over to you, is just our permitting situation, which I think we highlighted on the first slide, but really does make us unique. You can sort of express it better than I can on terms of the private ground and the 100% patented claims in terms of what that means for the restart.
Yeah, absolutely. So, jurisdiction is important, and Idaho is very supportive of the mining industry, very supportive of mining development done in a sustainable and collaborative manner. Bunker Hill is on 100% private land. It is on 100% patented mining claims, and that creates a regulatory framework where the permitting there is no overarching federal permitting regulatory authority here at Bunker Hill. Our permitting, the modest permitting that we do have, is all with the state and with state agencies. And the nice thing is that we can advance the project as fast as we can advance technically and operationally. That's the unique thing about Bunker Hill, is that the permitting is not the critical path to the project in comparison to a lot of mining operations in the Western United States.
Thanks. I think, I just wanted to highlight that because, and certainly would like to take the viewers here through our mine plan and our cost position. But, because of that smooth regulatory pathway there, what you're looking at in front of you here is what we plan to be in 2 years from now. I mean, this is our mine plan starting 2 years from now, effectively. So you see on the left-hand side here, year by year, 10-year mine life. This is expressed in zinc equivalent pounds, certainly includes a lot of silver and lead. But the resource that we were gifted 30 years ago that underpins this PEA, which is before all the silver potential, it means that it is a zinc dominant resource. So you see here in zinc equivalent pounds, about 90 million zinc equivalent pounds produced per year over 10 years. And you can see at a zinc equivalent cash all-in sustaining cost on a co-product basis of about 86 cents. You see on the right-hand side what that means for our cost position. We see ourselves in the bottom third with potential to reduce that further. Obviously, that's where you'd hope to be in terms of being able to ride the ups and downs in the cycle. A lot of headroom, as viewers know, to the spot price right now, which is at about $1.35 per pound of zinc, and in a very favorable market for miners in terms of treatment charges and the supply demand on the marketing side. If we go to the next slide, here is what I think is potentially one of the most interesting, if not the most interesting slide that we have in our presentation, because it demonstrates to investors the cash flow and the EBITDA that we plan on generating out of this mine. So you can see the headline in the slide, $20 million of average free cash flow over 10 years. You can see the dark blue bars are free cash flow, light blue bars are EBITDA. Again, keep in mind that we're at a market cap of $39 million here. So we've got a $40 million market cap. We've got a $42 million initial capital expenditure, and we're going to be generating $20 million of free cash flow at the mine level for 10 years. And we think it's going to be much more than 10 years. It produced for 100 years. We think it's got at least a couple of decades of life in it. So we're just getting started with this. Probably the most interesting part of the slide is actually the right-hand side, where you can see the silver grade in the last couple of years increases from about 1.1 ounces a ton up to 2.8 ounces a ton. And this is, as Sam highlighted in previous slides, where a lot of that silver really starts to come out. Now, neither 1.1 ounces a ton or 2.8 ounces a ton is actually very spectacular at all. But that's actually what makes this slide very interesting, is that you don't see, it doesn't take much of an uptick in the silver grade to see significant increases in free cash flow. So you see we go up to about 30 to 40 million of free cash flow and about 40 to 45 million dollars of EBITDA in those last couple of years. So, certainly those veins that we're targeting at depth of, historically 10 to 15 ounces a ton, you can imagine what potential impact that could have on our free cash flow if and when we're able to get down there and bring that forward. And so the plan here, as we continue to invest in silver exploration and optimize the mine plan, is to try to bring some of this uptick in silver grade a bit earlier in the mine plan, so we can not just generate 20 million of free cash flow a year, upwards of 30 to 40, as you see here. And again, that it should be noted, we'll come to in the next slide, which I'll go to now, is that these numbers you're seeing here are at metal prices that are significantly below spot levels. And so if we look at the middle blue bar on the left-hand side of this slide, these are the headline numbers that you saw in the press release. So $101 million NPV, 46% IRR. That was at $1.15 zinc, 90-cent lead, and $20 silver. You can see on the right-hand side what happens if you input spot prices. This is done as about a week ago. And you can see that it doubles. So we've got over a $200 million NPV at spot levels for zinc, lead, and silver. You can see the silver in particular there, $28 silver roughly, and it was about a week ago, but I don't think we're too far off from that now, versus $20 that we used in the PEA. On the downside, if you used $18 silver, so $10 an ounce below where we are now, you'd still be looking at a project that should be built because we've got a 24% IRR. And again, that comes back to the very low capital cost that it's going to take to restart this mine. We've got a number of sensitivities on the right-hand side here, but the takeaway from this slide is we've got very robust returns, 2.5-year payback with significant leverage to metal prices, and that's before the silver potential that we'll be focusing on over the coming months and years, which I think is worth sort of highlighting again. And I'll turn it back over to Sam to go through that on this slide here.
Yeah, thank you, Dave. And the exploration potential is really where the long-term value at Bunker Hill is going to be created. And when you look at Bunker Hill, as we've gone on a journey to really unlock and understand the geology, we've created a very, very robust 3D geologic model using all of the historic information and data. That's literally thousands of hand-drawn Mylar maps. There's over 3,500 historic drill holes. There's channel samples that have been taken. There's just an enormous amount of information and data that we've gotten into our geologic model. We continue to advance that every day, and what we're seeing is that there is very interesting exploration opportunities at Bunker Hill. Right now, we're focused in the upper levels of the mine. We're looking to strengthen and expand our resource. We're also looking to bring additional silver into the plan. The strategy and the focus, just to be clear, is to restart the mine with the existing base metal dominant resource, and it is to focus our exploration effort on more of the silver enriched galena mineralization, looking to rebalance the revenue stream coming out of the mine to be a 50% silver from a revenue perspective over time. There's excellent opportunities in the upper areas of the mine to do that, but the really exciting areas are certainly at depth, with the increasing silver grades at depth that we talked about. In addition, the over a mile of strike length that is very lightly explored between us and our nearest neighbor, the Crescent mine, to to our east. So what you can expect to see is that we will advance in a robust manner, working on not only our geologic understanding, but looking to add silver and silver dominant resource to the mine plan in the areas where we can bring it into the mine plan as quickly as possible. So really, it's very exciting.
All right.
Gentlemen, thank you very much for that. Shall we move into the question and answer period?
Sounds good, Mark. Actually, I think it might be worth just before we go there to just highlight some of the catalysts that we've got at the company over the next few months here, because it's pretty exciting. If I may, I'd like to go through some of these corporate catalysts, and then I'll turn it over to Sam here on the operational side. So, as an investor, what catalysts can you look forward to over the next few months? Why should you buy Bunker Hill? And we've got a lot of reasons for that. And we'd be happy to answer any questions right after this on any of these. So first of all, we are focused, as you know, as Sam said earlier, that when this management team came in about a year ago, we effectively picked up a dormant company. And so some of these catalysts you're seeing here are taking that sort of dormant company, bringing our sort of bigger company experience in, and progressing that, maturing that, and bringing us up to the standards that we should be in. So that starts with increasing our U.S. trading liquidity, and we're making great progress on that. So what that means, right now we're on the pink sheets. Right now, our investors, particularly in the U.S., have difficulty buying the shares in the U.S. So our primary listing is in Canada under the CSE. We are listed under symbol BHLL in the U.S. However, a lot of investors aren't able to buy us in the U.S. right now, and that relates to an issue from about 10 years ago, which it has long been resolved, but certainly from a trading perspective hasn't been quite resolved. And so what we've been doing over the last few months, working with the regulators, is to remove that overhang, remove those trading restrictions, so that our investors no longer see what is called a caveat emptor, which in Latin means buyer beware. Again, relates to previous board, previous management, previous shareholders, previous company that wasn't even called Bunker Hill Mining. So what we are doing is removing that. We're very close. And after that is done, we expect to see a very significant increase in trading liquidity, not only in the U.S., but that will migrate to Canada as well. We see that also manifesting in terms of an upgrade from the pink sheets up to the OTCQB. We've prepared an application on that with the OTC markets, and we plan on submitting that soon. As soon as that we have our all of the issues resolved with respect to the restrictions. Research coverage. If you go onto our website, you can see we don't have any research coverage right now. And so we've been working and telling the story with a lot of capital markets players over the last a lot of research analysts over the last few months, and we've been getting traction. And I think investors can be very, looking forward to some progress in the very near term here on that front. The next three catalysts, these are all going to happen at the same time as we plan them. So the EPA, we are in the ability to pay process around that $19 million liability that we have with them. Those discussions are going well. We're partnering with them to find a solution. Everybody wants Bunker Hill to move forward. And we expect and hope to work with them over the coming weeks to come to a solution. If and when we're able to resolve the EPA liability, we plan to immediately purchase the mine. Again, we don't currently own the mine. It's a bit of a formality in order to purchase it because the terms are predetermined. It's about $3.4 million of cash and 2 million of shares. We would expect that to follow shortly after resolving the EPA process. And simultaneously, as we press released about a month ago, we are working with the preeminent mining finance advisor in the space, Cutfield Freeman, on a competitive process to raise restart financing for the mine, which again, luckily, we're only talking about $42 million in terms of initial capital expenditures, plus some corporate costs, but a very manageable capital bill. And we've had a lot of great interest across a broad spectrum of lenders, off-takers, streamers, royalties across the band. And so, the exciting thing for us over the coming couple months is to put together a package that makes the most sense for our shareholders, is the least dilutive, and that allows us to restart the mine rapidly. Finally, in conjunction with all those catalysts above, we are working with the TSX Venture to migrate the listing in Canada from the CSE up to the TSX Venture. And you would expect those to, concurrently with the above catalysts, to complete as well. So a lot to look forward on the corporate side as an investor. And certainly last but not least, we've got a lot of operational catalysts as well. So I'll turn that back over to Sam.
Yeah, absolutely. Thanks, Dave. So on the operational side, there's two parallel streams going on. One, we're advancing our geologic understanding and we're advancing our exploration, again, focused on rebalancing the resource to to be a silver dominant over time. You'll see work advancing on that front. And on the other path, we're looking at moving down the technical route towards towards de-risking and getting ourselves into a position with the technical work that we're ready for a restart. We're going to be going through the mine plan, doing additional optimizations. There's a lot of work that is ongoing with detailed engineering on the processing plant, and really laying out a detailed plan of execution for restart. One of the interesting things that is that we are exploring some opportunities for pre-production revenue with some toll milling opportunities, and that could see us offsetting and generating some revenue early in the restart process. So really, on the operational side, it's about advancing our geologic understanding and our exploration, and advancing the project towards restart.
Great. Thanks for that, Mark.
Gentlemen, thank you very much. Just wanted to make sure we were in the right place, and we're really grateful for the added information. And I will say that one of the biggest takeaways for a company such as yourselves that's going through this transition, the beauty of taking old energy, something that was, and restarting for full potential. So really, really appreciated the details and the microscope there. So thank you for that. We do have some great questions lined up. It's been very popular. So I'll start off with a question right out of the gate that says, how are you planning to fund your restart?
I'll take that one. So that comes right back to that restart financing process. So because we've had a lot of interest in financing Bunker Hill, we've decided to run more of a formal process rather than engaging just with one party. So we have hired Cutfield Freeman, who are the top advisors in the space. I've worked with them before. They're doing an excellent job. Normally they help companies. If you look at on their website, or know anything about them, you'll know that they normally finance multi-$100-million deals for bigger mining companies. And so they normally actually don't work with smaller mining companies such as ourselves. But, because of the relationships that we have with them, and because they like the project and see the financeability, they've decided to work with us. We're very happy to work with them. And we're right in the middle of that process right now, running a competitive process to find the lowest cost of capital, least dilutive, and that makes sense for our shareholders so that we can move this mine forward as quickly as possible.
Great. Thank you for that, David. Question comes, any mine bottlenecks to deal with the process going on?
Well, on the mining side, when you look at an operation, there's always a bottleneck. It just it's just where it is and how balanced your process is. So when I look at our mine plan and I look at it technically, I feel and it is certainly a fairly well balanced mine plan. So at a 1,500 ton a day production rate, you're very near what the historic production levels were, and were able to be sustained over 100-year operating life. And so it's balanced not only from the perspective of the balance between Capex and throughput for the processing plant size and scope, but it's also a balanced fit for the nature of the mining method, which is going to be mechanized cut and fill and sub-level stoping, and the resource itself, which and it's kind of interesting. The Bunker Hill, it is an underground vein mining, but what's important to understand that the bulk of the resource is in an area where the mining widths are up to in excess of 100 feet in width. Okay. So we're talking about very favorable geometry. And so when you take all that into account and you look at you look across the whole spectrum, from the ability to maintain and grow a resource, you look at the mining method, you look at the processing size, you look at the trade-offs between in capital investment and operating rate. We're really pretty comfortable with the 1,500 ton a day operating range. We've certainly done sensitivities and explored what it would look like at anywhere from half the size to double the size of where we're at now. And 1,500 is really a fairly well-balanced plan.
Okay, a magic number. Thank you for that, Sam. Another question comes in asking, are you confident that you can restart off of a PEA, and why?
Oh, very confident that we can restart off of a PEA. And why is because this is a brownfield restart, right? And that's a very important to understand. This is a mine that when it went into closure, still had 10 years of reserves in front of it, and it was shut down for a very specific reason, and that's because of 100 years of poor environmental performance. Okay. So we know a lot about the way that the ore body behaved. We know a lot about where the infrastructure lies. Most of the ore, or most of the mineralization, is developed, and we have access to, which is a huge advantage going into a restart scenario. So when you compare it to, say, a Greensfield, a fresh, unmined deposit, we are essentially 100 years down the road towards operation. So we're very, very confident because we of the amount of historic information that we're able to leverage and work on, in addition to the amount of in-place existing infrastructure that's in place.
Great, Sam. It's a great advantage to have the historical information to draw on before moving forward. Thank you for that. John David asks, what is the status of Crescent and Sunshine, please?
Well, Crescent and Sunshine are our neighbors to the east. The Crescent mine, interestingly enough, is actually connected to the Bunker Hill on the 23rd level underground. Okay. And so we actually share a common challenge, which is the water challenge. We're in discussions with Crescent right now around specifically on water and how that is managed and how that is dealt with. But I guess to answer your question directly, both the Crescent and the Sunshine Mine are on care and maintenance right now. Okay. And I don't know the specifics of what's going on there on a day-to-day basis or what their plans are, but we are certainly focused here at Bunker Hill. But we always do have an eye towards opportunities for consolidation, which is very much in line with what our long-range plans as a company are.
Great. Thank you for that, Sam. Manel asks, once the mine is back in production, how long do you think it will take for you to rebalance output of the mine to, say, 50% silver?
Yeah, that's an interesting question. I certainly think that we will get there. When you look at the entirety of Bunker Hill's production history, and you look at the way that interacted with metal price over that 100-year period, the Bunker Hill was historically, and its historical production, 50% from a revenue perspective did come from the silver. Okay. So we're just looking at that history. That's why we think that it's reasonable to get back to that. Silver price, commodity price certainly plays a role in that. And exploration success plays a role in that as well. There's no doubt about that. What we think that we're very, very well positioned though with a rapidly expanding knowledge of the geologic environment that we sit in. We are becoming more and more excited about the mineral potential of the asset as we continue to move forward on the geologic expression. I would hazard it. This is I'll talk about, rather than when we think it can happen, or talk about what we aspire to achieve. Okay. And I would say, within 5 years of restart, I would certainly like to be in a position where we were approaching, at 50% silver from a revenue perspective.
I appreciate that, Sam. No crystal ball, but helpful information. Thank you for that. The questions keep piling in, which is amazing. Next question here we have is, let me just move to a second one here because that one has been asked already. What are your near-term catalysts, is being asked?
Well, I think the slide is right there on the screen.
Mm.
You know, we have on the corporate side, we have the the trading and liquidity. We have the research coverage that's coming into play. We are in discussions with the EPA around the ability to pay. And just on that, I think it's important to understand that what we're talking about there is we are not discussing, you know, what his liability exists for historic environmental liability. That's all been settled. The consent decree, it's actually an incredibly important and valuable agreement, because it creates a clear break from all historic environmental liability at Bunker Hill.
Okay.
That issue has been put to bed. What we're discussing now is we're discussing the $19 million in historic water treatment that is owed to the EPA, which we agree to, and we are going to meet that liability. But we're discussing with them how we can structure that liability so that we can best meet that liability out of cash flow from a strong operating perspective. So that's what that discussion is. The discussion is not how much liability is there. That's been settled. That is clear. That is clearly articulated. There's a clear break with historic environmental liability. Now we're talking about the quantum and how we structure that payment to align with our business plans.
Okay, fair for that. Thank you very much. Next question would be, where might the concentrates go for final processing?
Well, go ahead, Dave.
Yeah, no, I'll take that one. Thankfully, what we have certainly based on historic records of 95 years, and we're mining obviously from the same areas here just at the beginning, is we have a very clean concentrate. And so as part of the PEA, we did a lot of work in terms of looking at exactly that question of where it could go. So the answer is it could go anywhere. There is a smelter about 4 hours up the road, Tex Trail smelter, that would be probably what you would call the most natural home for the concentrate, which is great. But we also looked at destinations in China and Korea. Certainly from a carbon footprint with the ESG focus that we have, we'd like to, not to mention a cost one, it would probably be a little bit lower cost from a transport perspective, at least. And there's always a trade-off between different terms, et cetera. And we could have a whole hour discussion just on this topic.
Right.
In short, there are a lot of destinations, and the reason there's a lot of destinations is our product we expect to be very attractive to buyers.
Okay, great to know that. Thank you, Roach. Another question comes up. What are you doing to increase your trading liquidity?
Yeah, and I think that comes, right back to what you see as that first tick mark on the slide there. We think this is a very important point and sort of the reason where our share price, well, not the only reason, but, certainly one of the major reasons of where our share price is where it is because our U.S. investors, rightfully have been a little bit annoyed here that they haven't been able to buy Bunker Hill stock in the U.S. So that's been one of our top focuses. And so we've been working with FINRA, we've been working with OTC. Progress has been good, and we expect to have resolution soon in terms of uplisting our U.S. symbol and allowing U.S. investors to buy us.
Okay, thanks for that, David. I appreciate it. Some fine detail questions. Ryan asks, are the past environmental concerns expected to impact permitting and/or remediation and reclamation costs?
The simple answer is no. And again, it goes back to the consent decree. So the consent decree was reached, and it creates a clear break from all historic environmental liability. Now, that being said, the EPA has done an absolutely fantastic job over the last 40 years remediating not only the Bunker Hill site, but the entire Superfund site, which actually a lot of people don't realize this extends from the Montana border all the way into Washington. So no, we don't expect the past environmental concerns to affect permitting and remediation.
Okay, I appreciate that. Thank you for that. Next question comes up. Let's see here. Vern asks, why is Capex so low, and how much of this historic infrastructure is usable today?
Well, Varun, I think you answered your own question there. The initial Capex is so low because of the amount of in-place infrastructure. So in a mine like this, you would expect to see a significant portion of the initial capital directed towards the access and development of the mineralization. And for us, that investment has been made already. And that investment is significant. There's hundreds and hundreds of miles of existing access tunnels that are in Bunker Hill. Many of those are accessible. We can access the mineralization and the initial areas of the mine plan right now with rubber tired mining equipment. And so the primary reason is that in large part, the underground development and access to the mineralization is existing and is available to us right from the start.
Terrific. Thank you for that, Sam. Peter asks here, can I have an update on the purchase options and the deal with the U.S. government?
Okay, so I think what you're referring to is the ability to pay process and the discussions we're having with the EPA. And I think that the important thing to understand there is that what we're doing is we're looking to structure the repayment of a liability that is articulated in the consent decree in such a way that it meets the needs of all the stakeholders, the EPA, the state of Idaho, and ourselves, and structure that in such a way that we can meet that obligation and liability out of cash flow on a restart. So obviously, an important part of that is being able to clearly articulate what our operating plan and what our business plan looks like. So just like the public markets and the EPA is looking at and reviewing and asking questions about our PEA and the technical document and the technical report associated with that to get an understanding of what that business plan looks like. And what I can say is that the conversation is ongoing, and we're actually pretty positive and excited about the way that those conversations are going.
Okay, thank you for that. We have a question from Ryan here that asks, what is the timing on the mine purchase itself that would lead to owning 100% of the asset?
Dave, I'll let you speak to this one.
Absolutely. So the timing of so we have an option to purchase that expires in August of 2022, but we certainly plan on purchasing it well before that. And you can see on the top side of the slide here, in terms of the catalyst, that comes right back to restart financing. And so as soon as we have certainty on the EPA settlement and the restart financing package, we will be pulling that trigger. And purchasing the mine and moving rapidly into doing all the things necessary, including purchasing the mill and queuing up the construction of that and rapidly moving through that 15 to 18 month period to get into commercial production.
Okay, thank you, Dave. Appreciate those details. We're just wrapping up our time here, but I always want to hand the floor back to you if there anything else has come to mind through the share, or if you feel there's something else to offer to the audience. Please feel free if we've not touched on something or something else has come to mind.
I think from my perspective, and maybe turn it back over to Sam here in a sec, but I think it was a great question from the audience there on the historical, clarification of the historical liabilities, which really there are none. Apart from the settlement of that $19 million liability. But in terms of I think it's worth highlighting one more time that there aren't any future material reclamation or environmental work that will need to be done out of this either, because of the unique solution we have, underground processing and tailings. Sam, maybe just a second on that, I think would be just good to remind the viewers of that.
Yeah, absolutely. So we are going to do underground processing and underground tails deposition, and that does a couple of things for us. Number one, it reduces the capital bill. We don't have to build or permit a surface tailings facility. But most importantly is that, as we deposit tails into the historic mining voids, it's going to begin to break the chemical reaction that is the genesis point for acid mine drainage. So over time, just the act of us mining and using the tails for geotechnical fill and also for to place into the historic mining voids, we're going to begin to address the long-term environmental challenge at Bunker Hill, which is the acid mine drainage. And I think, Mark, what I would like to leave everyone with is, we've talked a lot about Bunker Hill, and that's for good reason, because that's our number one focus. That's what we're laser focused on. But what I would like to remind everybody is going right back to the beginning, is that, we're a company that sees Bunker Hill as the first and a cornerstone asset of what's going to rapidly grow to be a multi-asset North America focused producer who's operating on the leading edge of ESG, really, and using ESG as a creator of value. When you look across the Western United States, there is numerous assets that have an unquestioned mineral potential, but are distressed for environmental or social reasons. And we see that as a tremendous opportunity. And Bunker Hill is the test case for that, and it's the proving grounds. But we believe that a company with the right focus on ESG and the right operating and technical skill set can come in and create a lot of value, not only on the project economics, but value in terms of remediating and in some cases improving the environment and delivering metals to the global economy in a very sustainable way.
Beautiful. Thank you both for sharing so openly. I will say this has been one of the more detailed questions that we've had in our presentation in this conference. Really, this is what VID conference is all about, to be able to bring people like yourselves to an audience that gets to ask directly from the source where the company is, what it's up to. And I see such potential with the blueprint of this turnaround operation. And I really appreciate your candid nature and being able to help our audience understand better what's happening at Bunker Hill. Wish you best of luck moving forward. We'll be watching the company.
Thank you, Mark.
Thanks so much.
Thanks, Mark. Appreciate it.
Thank you very much, gentlemen.